Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about oil. Saudi Arabia and the other OPEC Plus producers have announced another cut in oil production levels of more than 1 million barrels per day will take effect from the 1st of July. And this is the third cut that OPEC Plus have announced in the last 7 months. Now, the reason why Saudi Arabia and OPEC Plus are announcing these cuts is that they want to maintain the price of oil. These countries have vast reserves of oil, and they want the price to stay high so they can maximise their profits. And simple economics tells you that for any product where there is strong demand, such as oil, if you reduce the supply, then that will increase the price. However, in today's video, I want to investigate how successful the previous 2 production cut announcements were in terms of increasing the price of oil and how long those price increases lasted for. Because the price of oil, as well as affecting all of our lives, is a major issue for Russia. The Russian economy is entirely dependent on oil revenues, and when the price of oil falls, that means that the total revenue that Russia is earning will also fall, and any fall in oil prices will have a disproportionate impact on Russia because it's still having to sell all of its oil at a discount to the global market price. Now, obviously, Russia is under a lot of pressure already because it's facing significant sanctions from the West. But if the price of oil continues to fall as a result of a slowdown in the global economy, that could have a disastrous impact on the Russian economy. And we saw this back in 1998, when a global slowdown resulted in the price of oil falling to around $10 per barrel, and Russia actually defaulted on its debt obligations at that time. So in today's video, I'll have a look at the latest announcement from Saudi Arabia. We'll have a look at which countries are the largest producers of oil. I'll give you some details on the OPEC Plus consortium. We'll have a look at oil prices and specifically what happened to the price of oil following the previous announcements by OPEC Plus. We'll have a look at what's going on with the price of Russian oil. And then finally today, I'll wrap up with my summary as to what I think is likely to happen to the price of oil and also the Russian economy over the course of the next 3 to 6 months.
Saudi Arabia on Sunday said it would dramatically cut its crude oil output as part of a deal by OPEC Plus nations to tighten supply into 2024 as producers seek to boost falling oil prices. The Saudi Energy Minister, Prince Abdulaziz bin Salman Al Saud, referred to the million-barrel cut as the Saudi lollipop in that it sweetened a deal by fellow oil producers to curb production.
And I would have to call it the Saudi lollipop, which is a million barrel of reduction for the start that starts at the 1st of July. And that million is also extendable.
Saudi's energy ministry said the country's output would drop to 9 million barrels per day in July from around 10 million barrels in May, the biggest reduction in years. OPEC Plus, which groups the Organization of the Petroleum Exporting Countries and allies led by Russia, pumps around 40% of the world's crude, meaning its policy decisions can have a major impact on oil prices. A surprise decision to cut supply in April briefly sent international benchmark crude around $9 higher. But prices have since retreated under pressure from concerns about the weakness of the global economy and its impact on demand. Saudi Arabia is the only member of OPEC Plus with sufficient spare capacity and storage to be able to easily increase and curtail output.
Saudi Arabia has announced it will make deep cuts to its output in July, on top of a broader OPEC Plus deal to limit supply into 2024 as the group seeks to boost flagging oil prices. Saudi Arabia's energy ministry said the country's output would drop to 9 million barrels per day in July, from around 10 million barrels per day in May, which is the biggest reduction that the country has announced in years. This cut followed on from the announcement on the 2nd of April that the OPEC Plus countries would be cutting their production by 1.16 million barrels per day, and the announcement on October the 5th, 2022, that production would be cut by 2 million barrels per day. So in total, over the last 7 months, OPEC Plus have announced cuts in production of 4.16 million barrels per day, which compared with total global output of around 80 million barrels per day, represents over 5% of global production. This table shows the largest oil producers in the world in 2022. And this shows that at the top of the list was the USA, producing just under 12 million barrels of oil per day, followed by Saudi Arabia with around 10.6 million. Russia was at number 3 with around 10.3 million. Canada came in at number 4 with 4.5 million. Iraq number 5 with just under 4.5 million barrels per day. China was number 6 with just over 4 million. United Arab Emirates number 7 with just under 3.5 million, Iran number 8 with just under 3.3 million, Brazil number 9 with just over 3 million barrels per day, and Kuwait was at number 10 with just over 2.8 million. Now, in terms of translating oil production into the impact on the global economy, we need to have a look at which countries are consuming the most oil, and that will then show us which countries are the largest exporters. And this chart shows the top 10 consumers of oil, and you can see that the United States is by far the largest consumer of oil, consuming almost 20 million barrels per day, followed by China, which consumes around 12.8 million barrels per day. India is the third largest consumer of oil, followed by Japan, Russia, Saudi Arabia, Brazil, South Korea, Canada, and Germany. So what these figures reveal is that despite being the world's largest producer of oil, the USA is also the world's largest consumer, and as a result of this, Saudi Arabia and Russia are the world's 2 largest exporters of oil. And as a result of this, Saudi Arabia is the world's largest exporter of oil. And back in the 1960s, Saudi Arabia decided to set up a consortium called OPEC to protect the price of oil. Now, before we go on any further today, I want to talk to you about today's sponsor, Shortform. If you're a regular viewer of my channel, hopefully you're tuning in to learn something, to expand your knowledge. And the vast majority of us have a thirst for knowledge, but limited time. And Shortform is one of the best ways to learn ideas from all those books you've always wanted to read. Shortform produces uber high quality guides to non-fiction books, which are basically super-powered book summaries. I've been using Shortform for the last few weeks, covering topics such as business, finance, and entrepreneurship. And I found Shortform to be the perfect way to check out the key ideas and ingredients to a book, which then enables me to decide whether or not I want to invest more time in reading the full book. So if you're pressed for time like me and are looking for a way to make accessing the world's best ideas and books easier, then Shortform is for you. To get a free trial and an additional 25% discount on the annual subscription, join Shortform through my link shortform.com/Joe, or scan the QR code on the screen, or click the link in the description below. OPEC, which stands for the Organisation of the Petroleum Exporting Countries, was founded in Iraq in 1960 by Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. These countries were later joined by Qatar in 1961, Indonesia and Libya in 1962, the United Arab Emirates in 1967, Algeria in 1969, Nigeria 1971, Ecuador in 1973, Gabon in 1975, Angola in 2007, Equatorial Guinea in 2017, and Congo in 2018. However, Ecuador, Indonesia, and Qatar have subsequently terminated their membership, which means that OPEC today has 13 member countries. And these 13 countries represent around 35% of the global supply of oil and 82% of the globally recognised reserves. And alongside the official OPEC countries are another group of countries, and when they're added to the OPEC countries, this is referred to as OPEC+. And these countries are Russia, Kazakhstan, Azerbaijan, Mexico, Oman, Bahrain, Brunei, Malaysia, South Sudan, and Sudan. And collectively, the OPEC Plus countries account for 55% of the global supply of oil and over 90% of the identified reserves. So this represents a very powerful group of countries in terms of the supply of oil globally. This chart shows the movement in the price of oil over the last 10 years. And the reason that I wanted to go back 10 years was to highlight the cyclicality of oil prices. Generally speaking, the price of oil is linked to what's happening in the global economy. When the global economy is performing strongly, the demand for oil increases, and therefore the price of oil generally increases as well. However, unfortunately for oil producers, the reverse is also true. When the global economy starts to slow down, the demand for oil reduces, and therefore the price of oil generally falls. So you can see from this chart that back in June 2013, the price of oil was sitting at around $100 per barrel, and the price of oil remained above $100 per barrel until July 2014. However, we then saw a steep decline in oil prices, and by February 2016, a barrel of oil was trading for less than $30. As the global economy started to pick back up, the price of oil rose, and by September 2018, the price of a barrel of oil was around $75. The price fell to around $60 per barrel in 2019. However, after the COVID-19 pandemic struck all around the world in the first part of 2020, the price of a barrel of oil fell to less than $17. In the second half of 2020, all the way through 2021 and the first part of 2022, we saw a steep rise in the price of oil, and following Russia's invasion of Ukraine at the start of 2022, the price of a barrel of oil spiked at around $130 per barrel. However, over the course of the last 12 months, as the global economy has started to slow down and forecasts for a recession became common, we saw the price of oil come tumbling back down. So this analysis shows how volatile the price of oil is and how it's linked directly to the global economy. And that's obviously frustrating for the oil-producing nations because they've got large reserves of oil that they want to sell for as high a price as possible. So the last thing that you want as a producer of oil is to see the prices falling at a time when you need revenue. So as we discussed earlier in the video, in order to try to address what's happening with prices, the OPEC Plus nations have announced that they're going to cut their production to try to keep prices high. And what I wanted to do at this stage is evaluate exactly what happened to the price of oil following the previous two announcements. On the 5th of October 2022, OPEC Plus announced that it was cutting oil production by 2 million barrels per day, so quite a significant amount. On the 4th of October, the day before the announcement was made, the price of a barrel of oil was trading for $85. And the chart shows that by October the 7th, 2 days after the announcement of the production cut was made, the price rose to $91 per barrel. So the immediate market response was exactly what OPEC Plus were looking for. However, by October the 18th, so less than 2 weeks after the announcement, the price of a barrel of oil was down to $81. By the end of November, the price of a barrel of oil was down to $75. So that's $10 less than the day before the announcement was made. And between the end of November and the end of March, the price fluctuated between $75 and $80 per barrel. So the announcement of the cut in production didn't really have the desired effect on the price. So in an attempt to try to get the price back up, on the 2nd of April, OPEC Plus announced that it was cutting production by a further 1 million barrels per day. The price of a barrel of oil was trading at $75 on March the 31st, the last trading day before this announcement was made. And immediately after the announcement, the price of a barrel of oil rose to $83. However, unfortunately for OPEC Plus, that increase in price was short-lived, and by May the 3rd, a barrel of oil was trading for less than $69. So what this analysis shows is that despite OPEC Plus's attempts to get the price of oil up by cutting production, the long-term trend in prices has been downward, and that's because the global economy is continuing to slow down. We're seeing a slowdown in Chinese growth, and as we discussed earlier in the video, China is one of the world's largest importers of oil, so therefore has a big impact on global demand. And this proves that the biggest single influence on the price of oil is global appetite. It isn't a production cut by OPEC+. And when you bear in mind that this chart includes two major announcements by OPEC+, it's likely that the price of oil would have fallen further if those production cuts had not been announced. As I'm sure you're fully aware, the price of a barrel of Russian oil trades at a discount to the price of any other oil, as a result of the sanctions which have limited the markets that Russia is able to sell into, and also the price caps that have been applied against Russian oil. And this chart plots the movement in the price of Brent crude oil and Russia's Urals oil over the course of the last 12 months. And you can see that broadly speaking, the discount applied per barrel is around $20. So currently a barrel of Brent crude oil is trading for around $75, a barrel of Russian Urals oil is selling for around $55. And Russia is producing around 9 million barrels of oil per day. So that $20 discount equates to around $180 million per day, which on an annualized basis means that the discount is costing Russia around $65 billion per year. And if we look back to 12 months ago, the price of a barrel of Russian oil was trading for $90. So today's price of $55 represents a fall of $35, which on 9 million barrels of oil per day equates to a reduction of $315 million per day, which on an annualized basis is $115 billion. And the reason that I wanted to highlight this is that it evidences how important the price of a barrel of oil is to the Russian economy. Oil revenues equate to around 50% of all of the revenue that Russia is bringing in. So when the market price of oil falls, that represents really bad news for the Russian economy. They have got huge exposure to oil. And to highlight how large that exposure is, this chart plots the price of oil dating back to the early 1980s. The Soviet Union was broken up at the end of 1991, and at that time the global price of a barrel of oil was around $20. By the end of 1996, oil prices had risen to around $25, which was good news for the Russian economy. However, unfortunately for Russia, the price of oil fell significantly in 1997 and 1998, and at one point was trading for less than $10 per barrel, which resulted in a huge recession hitting Russia, and Russia actually defaulted on all of its internal debt obligations. And once again, the reason that I wanted to highlight this was to show how intrinsically linked the success of the Russian economy is to the price of oil. So what's the summary and conclusion today? Well, I wanted to post this video firstly to share with you the news that OPEC Plus have announced a further cut in its production levels. Another 1 million barrels per day have now been cut from the production schedule, meaning that we've seen announcements over the last 7 months equating to more than 5% of global production. Now, in normal circumstances, you would have expected those announcements to cause a huge increase in oil prices. However, as we've seen from today's video, despite these announcements, the price of oil has fallen over the last 7 months. And the main reason for that is because everybody is concerned that the global economy is slowing down. We're seeing China not delivering the figures that everybody expected. There are still major concerns about all of the interest rate increases that have been applied in lots of the major economies. We've got Germany in recession. We've got the UK teetering on the brink of recession. We've got problems in Japan and South Korea and various other countries around the world. And I think what today's analysis shows is that OPEC Plus is struggling to be able to control the price of oil. It wants to keep prices at around $100 per barrel. That's the prime objective for announcing these production cuts, but it's just not working. So the bottom line here is that the OPEC Plus countries will receive less revenue for its oil as those prices continue to fall. So whilst that situation may be mildly annoying for oil-rich countries such as Saudi Arabia and the United Arab Emirates, it's actually a major concern for Russia. The success of the Russian economy is intrinsically linked to the price of oil. Russia is a net exporter of oil. It's producing around 9 million barrels per day, and the vast majority of that oil is exported. And the cash that Russia receives from the export of that oil is funding the Russian economy. Now, as we've discussed in multiple videos, Russia is currently subject to a variety of sanctions. There have been 11 rounds of sanctions introduced by the West against Russian assets. And those sanctions have had a direct negative impact on the Russian economy. If you've been following the channel, you'll know that in 2022, Russia reported a net deficit of around $48 billion. And in the first quarter of 2023, they've seen a further huge deficit of more than $20 billion. So Russia is hurting right now. And what the Russian economy really needs is for oil prices to rise so that it can put some more cash back into the bank. But unfortunately for Russia, what we're seeing as a result of the global slowdown is that oil prices are continuing to fall. And that means that Russian revenues are also falling. And compared with this time last year, Russian oil revenues are down by $115 billion. And the big concern from Russia's perspective is that we haven't hit the bottom yet. It's expected that oil prices will continue falling. OPEC Plus are doing their best to try to get those prices back up. But as we've seen from today's analysis, the biggest single factor in terms of setting the price of oil isn't the production that OPEC Plus are putting out, it's global demand. And global demand is still falling, and it's likely that over the course of the next 3 to 6 months, that global demand will continue to weaken, and therefore oil prices are likely to fall, which means that Russia's revenues are likely to fall, and that's going to put even more pressure on the Russian economy at a time when it's already hemorrhaging cash and announcing record deficits. So the overall summary of today's video is that OPEC Plus's recent announcement of production cuts haven't had a long-lasting effect on oil prices, and the latest announcement of another 1 million barrels per day cut is very unlikely to drive up the long-term price of oil. The global economy, and particularly China, is continuing to slow down. That's going to drag down the price of oil further, which means that Russia is going to lose even more revenue, and the deficit is likely to get larger. So I'll keep you posted on any further news and developments. Hopefully you found today's video useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.